questions you guys have. If you have any questions, I'll let them steam through. If not, I'm going to go back to my screener, my 1 hour screener, and just kind of go over what the waves are looking like. And so you guys can maybe get a little bit understanding of how I may mark up charts or how I look at a screener to help you filter through pairs that you may want to trade during the times that you trade. And so I don't see any questions. So if you guys want to have me teach, then let's get after it. So for me, I mean, I'm more of a New York and London trader. I stick to U.S. and Canadian pairs. You may be different, but you can use this for almost any pair that you may trade, right? The first thing I would look at, these is a 60-minute chart, and I've got my tab 29 here on the bottom. Necessarily don't need to have Bollinger Bands because there is slush in Bollinger Bands. But what you want to look at is the channel size. So in this particular set, these are 50 pip channels, price channels here. You can move and widen them out, but I see a bunch of wicks here, and our tab 29 is really not telling us much. So my first thought, I'd look and see what the trend's telling me, see what the market conditions are. So what do you guys think of the market conditions here? Let me know in the chats what you guys. Flat, consolidation. I got a price and range, not great. Consolidation, flat. Okay. So then we can, I could go real quickly. I looked at the euro, one of these charts. So yeah, look at this mess, right? You really, here's a 30-minute, 5 and 1 minute, but you can just see that madness. Is this something that we want to maybe try to get into some trading when there's high consolidated channels with tight stops? Not at all, right? So that's simply how I look at the screener. But I know, looking at that, I have an idea what market conditions are. And you can too. It's not, anybody can create a screener. You don't even have to have anything at all. You can have the 51362 indicator, the HTATF that Steve did a training on. That'll put on your 513 and 62 per time period on the charts, okay? So now let's look at, this is the British pound, US dollar, and I know there's some news coming up early morning here, another 12, 13 hours. The GDP, but you can see there's some consolidation here. You can see wicks are coming back in these circles as the 30-minute 62 EMA. So you can say that a lot of this right here at this given time period is wicky. We did have a good price movement here over 1, 2, 3, 4, 5, 6, 7, 8 hours. You had a decent drop. These are 20 pip channels. So 20, 40, 60, almost 80 pips over 8 hours. And you can see we had a 1 hour harmonic wave convergence at the top. So movement here in the wave. Then we finally had a breakout movement down. And the 1 hour went to extreme, and we had a retracement up. And so now we see some consolidation that's taking place on the British pound. So not something really to look at to chart. You can, but you can see the price came down, and then we had a retracement, and it's acting as it's in the gravity zone, right? Within 20 pips of the 62 EMA, 30-minute 62 EMA. Okay, Mackenzie, good question. UC looks good. Yeah, I'm seeing here we've got 50 pip channels. I mean, there's some wicks, but you see market movement, right? We can see here in tab 29 that the 240 wave is cycling down with the 1 hour, right? So you can see we have movement down here, come up, hourly move down, right? That's what if I'm going to go look at tops of the indicator with price, there's a top here. I may look at here, the next highest price here at indicator, right? So when I see a retracement, as we know that tab 29 is a relative indicator, we have to see market movement in price, or you can see market movement here and we know that these channels are really not favorable for trading, right? We could come down here and see, okay, we've got movement here, and the 240 is being cycled down. So there would easily been some times in here to have retrace extremes where we can go and look at that. So we can look at the CAD, all right? Here's Canadian yen, and I know that's been on the fritz a little bit lately, but you can see we have a low point here, high point, we got a retracement, and we've got a 1 hour harmonic wave convergence up here. So you can see with the indicator came here, correcting, came down a little bit, moved up. I mean, that's simply how the waves are here with price. But you look relatively what size of the channels, right? This is 50 pip channels, so this is about a 50 pip move up over 4 to 5 hours, which is still some good market movement, right? So you can see the Canadian pairs, you know, we're moving today in the markets, and you can see that the euro and the British pound, I mean, British pound moved early morning. So now if you look at the Aussie yen, which opens up here next 4 or 5 hours or so, you can see we had a 4 hour, and the 1 hour has been just kind of moving up, cycling up the 4 hour, right? In an upward trend. You don't really see a lot of movement. A lot of price movement comes up over 50 pip channels, right? Come up, 25 pip retracement up. And so that's what we can see on the 1 hour. So I haven't even looked really much at the markets today, but let's look at the Canadian dollar. All right. First, and we looked at the hourly. First thing I want to do is look and see what the 5, 13, and 62 are doing. All right, first we had a cross, right? We had an impulsive move. You see some corrections in the market. And now we see we had a 4 hour convergence, right? So we had a 30, cycled up the 40, or the 240. The 240 snakes, which is common. Snaked from at this point, the 240 was at an extreme and snaked as price continued just kind of cycling up. And then we have a price movement down to the 62, or the 30-minute 62 EMA. Come back up, we pass it through. Okay, another thing we can look at is shadow bands. Let me open this up a little bit, and let's see here. I use sometimes the 5, the 8, because those all could be potential support and resistance lines. But mostly I like to see the 34 shadow band and the 21 shadow band. I'm sure you all are familiar with that so far if you've been following the training, but in green is the 30, in red is the 34, 21, the green is the 21. So you can see we know as price breaks the 34 and crosses the 21, we have an 87% chance of going to the 62. And then it comes back, retraces, because the 21 shadow band is also called the gatekeeper. I know in my first session I forgot to mention it, but if I say the term there, it's because it does stop price. And you can see here it's pretty relevant in a good moving market. Boom, stops here, stops here. This is a 30-minute harmonic wave convergence that barely made it. So it was a retrace extreme as this 240 wave cycling down, right? So this would have been a nice trade to get into, or a retrace there. Another thing you can do, because if you were seeing price and you were trading this morning, you saw price moving and coming down, and you could set traps, or you could set pitchforks for that 30-minute move. That may potentially be a good pitchfork. May not be. Let's see. You can look at traditional. It's pretty steep. We could even look at scans. I know that was AJ. Let's see here. So here, 30-minute scan, we have that impulsive move. So it actually, that C point there was a 30-minute retrace extreme, and then it moved down impulsively as a C to D move. So it's something to watch. You could do a large pitchfork, but I like to do the smaller pitchforks. So it's good to know, though, that this here could have been a very large pitchfork, but we could do everything per time period. And so you can see this pitchfork has some relevance. So if we could see if price ever color it accordingly, right? We're on a 30-minute chart, and we could call that a 30-minute pitchfork. But the confirming hits that we have, since it is a best fit, you know, we've got this hit here, 50% Fibbo off the 21. This hit right there, energy point off the 21. And we know with this overall move with price, the 513 crossed here, right? So now we're on the bottom side of the 62. So now we can expect price to come here, and this 62 may even move over here. So this line is worthwhile to, what I'll do sometimes, come here, make a line or a trend line, drop it down around 5 pips, and then add alert to the trend line. Okay, you can set it up however you want, open-ended. You can make it dashed. Just pick a darker gray so it kind of hides. But you know, if you can have it set to your phone, if it comes up, this pitchfork has already been, you know, we've got 2 validations here that price was kind of contained. So it may be viable to look and compare with our tab 29 confirmation. Okay, let's look and see on the 5-minute chart to see if there's anything there to look at. You could have a wedge breakout here. And you have no idea what it may do, but something to look at here, an indicator, is relative to price with these movements here and then these movements here. So let's clean this up a little bit. Let's start this again. Okay, this is an extreme, 5-minute retrace extreme, 5-minute retrace extreme. So we can circle these or mark them as we see fit. Okay, here's another retrace coming down and up in a line here. So potentially you can see price is fizzling down relative to the indicator in this movement here. So you may see a retracement, as we talked about, because the 30-minute is at an extreme. So you may see a breakout, as we discussed, and come up to the 62 EMA. And you can see if it breaks shadow band. Okay, I think I've got these shadow bands set up for 5. And then you can also select these, since it's a 5-minute chart, you can select shadow band, 30-minute shadow band, work on 30-minute chart or lower. Okay, I need the 21 shadow band down and the 34 shadow band down, right? So we know if we continue to watch this, we can see, okay, if it breaks, comes up to the 34 and crosses to the 34 and comes up and breaks the 21, then we have an 87% chance of getting to that 62. But you also got the 5-minute 62, the 10-minute 62, and the 15-minute 62 that may hit a retrace extreme. The 10-minute may come back up and have a 10-minute harmonic wave convergence trade if this 30-minute wants to stay down. You know, you never know. But if it does retrace back, because we are 34 pips away from the 62, the 30-minute 62, or past that. And as we know from Rob Booker, as we get 30 to 40 pips away from the 62-minute or 62 EMA, the 30-minute 62, it's in aqua. Okay, we look for trades that come up and retrace here. I'm not saying we're predicting price, but I'm just stacking probabilities of what we may find, what we may see in the markets as we set traps. We could always set alerts on those traps. And right now, heck, it could be breaking out and continuing to go lower, which it may potentially do. All right. Any more questions on the CAD? You think we covered enough there? Setting traps, looking at, I mean, there's a clayway there right off the harmonic target 55, and then it broke out. So these would be potentially the trades that one may look for when it comes to a 5-minute retrace extreme trade. And as we can look on our 1-minute charts, you know, our channels are pretty small. What was the time? Yes, not quite. All right, we go back to our screener. And, you know, I looked at AJ as well, and I had a pitchfork that I put on AJ. Okay, got some questions. I'll stop there and look at some questions. All right, hopefully I didn't go too far here. Let me retract back here. This particular pitchfork, Taj, is a best fit pitchfork because there's no, it needs to be connected to a previously swing high, and since I just kind of moved it as a best fit, so the second hit would have been able to be traded here. And if I come back and actually sync that up, we could have seen that this was a clayway trade right there. And you can see with the Waveology coming up to this clayway trade that, you know, price came out. We had a 10-minute convergence here. And actually, let me open this up. Take some of the clutter off of there so you guys can see it better. So this first hit was off the 21 shadow band, okay? And we could have set that pitchfork previously to that hit. So we had a 10-minute harmonic wave convergence. Price came down. We had another 10-minute harmonic wave convergence. And then even though this is wiki, you can see that this is an ABC correction after the fact. But as we know, corrections in, you know, ABC, and I don't want to teach waves, but you can see it, an indicator. The 5 comes up, you get an A, it's real wiki, you don't see it. And then we have a retrace extreme up here with the 10 minutes going to at least 80. So I know this would have been a good harmonic wave convergence after a previous 10-minute harmonic wave convergence. This would have been a good trade opportunity. And you can do your INS lines. Let's see here. I guess I'm not showing enable code, so, but you could run an INS lines and try to get a trap there as well. Okay, let's go look at another pair. Let's see questions. How would you set up an alert for a 30-minute retrace extreme against a 240 snake? You would set for you could set tab 29 alerts when it's at an extreme. You can set a percentage. So if I simply just came in here, right-clicked, Okay, that says add alert to Bollinger Band. Right click, add alert. Hold on a second. Okay, there. No, why is it doing? Add alert to indicator. That's different. All right, let's try this again. Add alert. Condition tab 29 alerts that we get available through an indicator. And you could say 30 minutes sell alert. You could say it only once if you want, per 30-minute bar if you want. You can set a 30-minute alert, and basically what that's going to say is at tab 29 alert, you set what level this will be at an extreme. So if this is a 240 retrace extreme, it simply would be, since we have 30-minute movement, a retrace extreme of the 240 wave is when the 240 is moving down, as you can see, it's cycling down with price, and then you have a 30-minute harmonic wave convergence, or at least close to that. This went at least, I think, 85%. And then you would have received alert, and it comes to the charts. Then you could set your traps, get your confirmations, wait for this retracement, and trap trades. Hopefully that helped answer that question. So Jan's question is, why do I keep the 5-minute shadow band on my 1-minute chart? Simply because I want to see a 10-pip channel, which is a good question. I like to, let's see, and I use a screener as well, another screener. Hold on a second. Here's my 5-minute screener. I do the same thing, a 5-minute shadow band on there. I'll find an example. Maybe let's see. So if you look at price, and I'll take the shadow bands off. So here's a 1-minute chart, and we're still on the Canadian dollar. You can see that one breakout trade that, oh no, here was that breakout trade, originally a 10-minute convergence. Here's another with 80% off the pitchfork. I have the 5-minute shadow bands there because they're 5 pips away from the 62. And so overall, this is just going to be a rolling channel of 10 pips. So the question is why I had this on my chart, because we know this is 10 pips. And what I've seen is when price is outside of this 5-pip channel, we usually have enough steepness that we could trade. Even though these, I mean, this is about 10 pips in width between, this channel here coming down, but we are pretty steep. Whenever I'm outside of this, 5 pips away from the 62, and then it's outside of the 13 EMA, I usually see, there could be potential for POT trades if you trade that way, but it's more an advanced type of trading, as you can see the retracements. But I don't know if I answered that question the best I could. Does that make sense, Jan? Just allows me to see channel size, because when the market's small and not doing anything, as of right now, and the channels are not big enough, it's inside the 5-minute shadow bands, or the five up, 5 down shadow bands. I was calling it 5 minutes, so that was probably confusing. And reading some questions here. Yeah, Janelle, that question there might be better on a post so I can lay it out with the photo. It's better to see because it's going to be hard for me to go over that. I don't know about Vegas tunnels. I don't believe so. I just know when it's consolidated market, you will not see when it's usually consolidated like it is during market conditions are not very active and market volume's not high. You'll tend to just see them hanging around the 5 minute or the 5 up, 5 down shadow bands. Okay. You still need to measure channels with the 5 up, 5 down shadow bands. It just gives me a guidance to see, do we have enough market movement? Because this is still coming out of summer. We're getting closer to fall. Markets are starting to get a little bit better for trading, but you still have to be very cautious of market consolidation. All right, let's take a look at AJ. So I had a pitchfork on here previously, and I guess this should be, I guess I could name it color aqua. We'll leave it the same color it is now. I had some, well, let's see, may even need to adjust it some more. It might look a little bit better for a best fit. Since we do have some hits here, some hits down here, some more hits, another hit here. And so when we're looking at price, we can look and see overall let's get some of the Bollinger Bands off. I do have the 1 hour on here as well, but that may be a little confusing, but you can see in gray the 1 hour, this is also being cycled in the 1 hour. So the 240, we had a 240 convergence down here in green. We have a 240 convergence up here, okay? And all we have is a bunch of wave movement in between. Up, down, retrace, come up, down, retrace. We know our 13 crossed here, and so price is above, and we do have 10 pip channels, so, you know, at this point here, we're 10, 20, 30, 40, 45 pips above the 62, and so we know 240 was here. The 1 hour even came up. Now we've got the 1 hour, or the 30-minute cycling down. And relative to this, it just seems like a lot of consolidation, but we do have enough market volume that there's pips to be made inside this. This is a 30-minute chart. But one thing to recognize is that, here's a little tip, and I know Steve has given this out before, but whenever we have the 5 crossing the 13, quite often you'll see that time frame wave go to extreme. So when the 5 crosses the 13, there's a lot of times we're going to see this come all the way up to extreme. And so knowing that, we may see some more market movement. You know, this may hold, but we did have a 240, so this could easily come and do its own little correction. But having an understanding of where the market's at, now we can kind of set traps. So let's move over lower time frame. Yeah, so Beta, this is, you know, this is all fractal. So anything that we do on a 30, an hour, it all can be down to other time frames. I'm just sharing, you know, what I do looking at a screener, and I'll go from a 30 to get a better understanding of Waveology, because we can see where the waves are doing on a 30-minute better than what we can do on the 1 minute. but it's fractal. You could take it, if you trade 15-minute, 10-minute, we could do all of that. Let's see here. I'm not 100% sure if it's all on all time frames. I see it frequently though, from the 30 and like the 15-minute time frames. The 5, it's at an extreme much more frequently, so it's difficult to see. But as we see observations on the 30-minute time frame, we can drop it down. All right, let's look at the 5. And we still have our pitchfork there. One thing that I put on earlier is, okay, I'll do 5-minute pitchforks. So since we saw this retracement, you know, why can't we just put a pitchfork down there? Since we know we had a big movement up, we have an idea that's going to keep moving down the 30-minute harmonic wave convergence. Because as the 30-40 pips up, it went 30-40 pips up from the 62 EMA. And if it's too confusing, I don't know why I keep getting notifications. And if this is too confusing, you can always take off things from your chart. But you can see the 30-minute level on a 5-minute chart. It's just having the RES to be able to see past everything else and understand the market movement. This is still part of the 30-minute move. Okay. And so we even had a hit here for a clayway, right? So just off this traditional pitchfork that went from the swing high, swing low to swing high. And so, you know, there's another hit here, and then we see a market correction. So you may see break out, come up to the 62. We can look at our reality for the shadow bands as well. And I'll just put you can look at the other time frames, but it's easier. And so now we added the shadow bands to it. And so this may look a lot messy for some eyes. It's something that you're going to have to train yourself to. But as we know from Steve's own discoveries with the 34 shadow band and crossing the 21, we've got an 87% chance it's coming down here. And we've got plenty of traps that are set. You know, price may come up. Well, price is most likely going to break out. Trading disclaimers from this move, because we did have the 513 cross right down here, and so you could easily see a recheck on the 5-minute 62. We've got our pitchfork there. You know, that'd be a very powerful trade if it came up here, because we know there's an 87% chance it's coming down. All right. Got any more questions, guys? I try to keep these sessions short because there is quite a few. Are you guys getting some value out of this? Perfect. All right. And that's simply just coming off a screener, because looking here, you can see where the market's moving, right? You can see where the 240's coming up, the hourly cycling it up, where price is moving. Then you can see, okay, there's a retracement here on AJ that we just covered. There's a retracement here that ended in a 240 on the US dollar CAD. And you can look at the USD JPY right now. This is just consolidated junk, same as what the Euro USD is. So simple screener can just get you, I don't know why I keep getting notifications. I had to redo my computer. I had technical issues, had to reinstall Windows. So now Google is infiltrating me with notifications. So, all right, so we'll end here with some self-development stuff going on. All right, I just wanted to share with you guys something that I got a little behind on, was just daily tasking, daily planning. All right. And so I went and got a Panda planner. This is what this is. You know, they're helpful for me because you put each day down. This is something that, just a suggestion, so you could put what you're grateful for, your gratitudes when you wake up in the morning, what you're excited about. You know, this could be our growth formation, right? Steve did a session on that, what growth formations are. You know, you put in why, you insert the word you, and you say why you're grateful for, what you're excited about, right? Why you're grateful for the 4X, your focus for the day. And this could be just, you can make this trading wise. Today's priorities, you could put each trade that you may have taken, or for your daily task, your exercise, schedule and the time frame, any tasks that you did, and more importantly, at the end, what your wins for the day were. So annoyed. I don't even have anything open, but things keep popping up. All right. And so, yeah, this is, things that you can improve, but you could also put other graph formations, right? Why you're no longer trade wiki charts or consolidated charts. Why you're grateful to understanding the market movements. Why you're grateful why are you grateful for having the opportunity to trade, the additional time to trade. Then anything that you can do, I may even look at this, go put it together, a Word document, put it in landscape view, put 2 different columns, and just do a little simple breakdown that you could staple together and make a little booklet to try to do this for 30 days with 30 sheets of paper, writing down, what your set schedule is and plan is. Because if you have a set schedule that you wrote down, you're already programming your mind that you're going to be there to do this at that time. And even if you don't make it exactly that time, you can, there's next day to improve, to keep continuing to grow. I'm not sure the actual version of it, but this is the 2017, 2018 Panda Planner. And this is the monthly. I think there's 3 months that come in a booklet. It is pretty expensive, but just wanted to give you guys ideas of things that I do to help me stay organized, to stay on task. And I woke up this morning, I'm like, I didn't fill out a planner, so I don't know what my trading schedule is. I've been raising a 5-month-old right now, and so sleep, and I've been sacrificing sleep to just try to have time to trade in the mornings. But I didn't even have a plan this morning to know what time I was going to wake up, so no alarm was set. So I started my day early. But if you write out the schedule before you go to bed, Okay, 6 o'clock, I'm getting up here. For an hour, I'm going to exercise and do self-development work. Mow the lawn, whatever activities that you need to do. But just by physically writing it down, or even just journaling on a blank sheet of paper, you're giving yourself programming to do these tasks, to remember these tasks, to stay task oriented. Because if you're just perusing through Facebook, seeing what your friends are doing, you're looking through Instagram, seeing what everybody else is doing, if you're not working on your own dreams and your own success and getting your hands out of your pockets or hands off your phones, looking at what your buddy was doing on, whatever weekend, you're taking time from your own success. So now is the time. You guys at least took the time to be here, to be during these sessions, to try to improve your trading skills. And so you guys are taking the action there. Yeah, I had to completely separate myself from Facebook, create a new trading account where I'm only seeing trading. If you added me on a Facebook request on Tim Muntzy, I'll add you as a friend, but I'm going to unfollow you because I don't want to see your content. I just want to see trading. I focus my day on reading, self-development work, planning, because you want to stay on task. You want to feel like this whole section could be as big as this whole section here. Your wins, you could have a bunch of wins for the day because you got all these tasks done. And it just helps you stay planned. And doing this ahead of time, you're already programming yourself before you go to bed to wake up that you're doing this. And it doesn't have to be, I'm not affiliated with Panda Planner, but I just wanted to share with you guys something that I had, and I'm like, man, I didn't have a plan today, so I literally took the dust off my planner, and I'm gonna make sure it's here in the next 12 hours I'm up to trade London session. That's good. Yeah, self-development or social media could easily be distracting, guys. A lot of things, they're definitely set to distract us from our own success. But you guys, it's in your hands. It's completely in your hands. You get what you put out of it. So any effort that you do on a daily basis, you're going to get there. So, all right. All right, trying to get next slide here. And it is our disclaimer slide, guys. So appreciate you guys being here. Next time, if you guys come in, you got questions, give me some questions ahead of time while I'm reading the disclaimer. I'm trying to get this the best I can to help you guys build understanding in the markets, and I'm here for support. Try to throw out little tidbits and hints there as we come along, but I want to see you guys all succeed, and so that I'm going to end now. Just make sure you guys, those you care and love, make sure you guys tell them that you guys care and love them, because life is short. Love you guys, and thank you guys for being here. And we'll see you guys in Facebook land. We'll see you guys next Thursday. And so check out those other sessions as you can as well. And you guys take care. I appreciate you all positive comments and feedback. So see you guys.